Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, we've got some volatility here in the tech sector here, and the question is, can the other indexes, namely the S&P, the RUT, and the Dow, withstand the pressure that we're seeing from tech? And specifically, we've seen some testimony from social media executives in Congress, and that is definitely leading some volatility. So the trade I just put on with my research subscribers was Facebook. I'm going to tell you about it here. So this is Facebook on the daily, and to set it up first, let's overlay on top of the other social media stocks as measured by SOCL. This is the social media ETF. And you can see Facebook in red and green has done very well, and then all of a sudden we got the huge bombshell there. Facebook dropped sharply, and you can see that it did pull the SOCL lower. But what you'll notice is this guy had already made a lower high, and we're continuing to make lower highs here and lower lows. So SOCL is actually in a downtrend. Facebook's in a newly established downtrend. So if we just look at it over the overall market, you know, perhaps the broader NASDAQ is starting to take notice here. We've just begun to turn lower here in the QQQ. No real technical damage is done yet, but what's concerning to me is we're just breaking right now back below the 2873 high, which was tested multiple times in 2018. We broke as resistance. Now we're coming back, and we should hold as support. But in the pressure that tech is applying to this market, S&P looks like it might be succumbing to lower prices. So I'm a little concerned. I'm bullish. I have multiple long positions here, so I want to get some short exposure on as a hedge, and we're going to do it here in Facebook. So as we take the Qs off, just focus in on the Facebook stock. I mean, obviously it's technically damaged. Major gap down, bit of consolidation, tried to get back on its horse and head higher and couldn't do so, just failed. And I see no reason that we shouldn't be able to go back and retest the 150 mark, which was the old low here from April of 2018. There's a lot of momentum here. Facebook's on the lows, so we need to get to work here. So the trade I have set up for you here is in the October monthlies. We're going to go ahead and buy the 155 strike put, sell the 150. Altogether, this $5 spread's trading right now for about $1.30. So the total risk you have in this trade is $130. We position size here in Trading Nation such that we're going to risk half of that premium. So $1.30 gets cut in half to 65 cents or $65 per option spread. Cut the trade, contain the risk, move on, and it looks like the market's stabilizing, okay? So the total gain on the other side is the $5 subtracted from the $1.30 you have to pay to get into the trade. So that's going to be about $370 max profit. You don't have to hold this thing all the way to max profit. You could trade it just like a stock. You're buying the stock at $130, and if you get up to $180, $190, $200 on the spread, and you like the support coming in, you like the sell-off to ease up, go ahead and take the trade off, okay? So don't hold it all the way to expiration if you don't want. So the prices bounce around right here. I'm going to put in an order to buy at about $1.30, put the trade on, and it was just filled. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. Remember, this is a hedge to a longer-term portfolio. I do have my concerns here. I don't like the way the market is acting here on the first week of September, which is historically a very weak month for the market. So I want to get these hedges on. First step here is in the Facebook trade.